Ever buy something and think, this is junk, and then bam, it's worth a fortune? Or the other way around, like, what if I'd held on to that?
Yeah, the what if game.
Exactly. And that's what we're diving into today, cryptocurrency. You sent in a ton of articles and reports, and it all boils down to one big question. Should you invest? Is this the future of money, or is crypto on its way out?
It's $1 million question.
More like a multi-billion-dollar question
Yeah.
these days. We're going to break down everything from a guy who spent what would now be hundreds of millions of dollars on pizza to some wild predictions about where Bitcoin and other cryptos could be next year.
Pizza and millions. Now I'm intrigued.
Oh, it's a wild story. And get this, we're even going to explore how blockchain, the tech behind crypto, is changing stuff like how your groceries are tracked and maybe even how you vote someday.
Okay, I'm officially hooked.
Awesome. So let's start with that pizza story. It still blows my mind. Imagine ordering 2 pizzas Friday night, totally normal, right?
Yeah, classic.
Except this wasn't just any Friday night. Back in 2010, a programmer, Laszlo Hanyecz, paid for his pizzas with 10,000 bitcoins.
Back then, that was probably like, what, a few bucks?
About $41 to be exact. Not bad for 2 pizzas.
Not bad at all.
But here's the thing. Today, those 10,000 bitcoins are worth hundreds of millions of dollars. Crazy, right?
Yeah, talk about an expensive dinner.
So this wasn't just some random trade. It was the first documented real-world Bitcoin purchase. It's become this legendary thing in the crypto world, Bitcoin Pizza Day.
That's amazing.
Beyond the insane price tag, what does this story tell you about how far crypto has come?
Well, it shows just how new and experimental this all was.
Yeah.
Back then, Bitcoin was practically worthless. People didn't really understand it, let alone value it. This guy used it to buy pizza. It's a reminder of how much potential for growth and also for loss there is in crypto.
Right, it's like the early days of the internet when nobody knew what it would become. Okay, so from billion-dollar pizzas to the future, your sources are full of predictions for 2025, and a lot of people are feeling pretty good about Bitcoin and Ethereum.
Yeah, there's a lot of optimism, and it's not just coming from crypto enthusiasts. You have serious financial institutions making some pretty bold predictions.
So give us the numbers. What are they saying?
Well, a lot of them think Bitcoin could not only recover, but actually blow past its previous highs. We're talking way above $100,000.
Wow.
Fundstrat, they're predicting a peak of $250,000. Standard Chartered is saying maybe $200,000. Even more conservative estimates from JP Morgan and Bloomberg Intelligence still put Bitcoin above $135,000.
Okay, so what's driving all this optimism?
Well, there are a few things. One big factor is the growing popularity of Bitcoin ETFs.
ETFs, those are like baskets of stocks, right? But for Bitcoin.
Exactly. They make it easier for regular investors to get into Bitcoin without having to deal with the technical stuff.
So more people can get in on the action.
Exactly. And that brings in more money, which can drive prices up. Then there's Bitcoin's limited supply. There will only ever be 21 million Bitcoins.
So it's like a rare collectible?
Kind of. The scarcity makes it more valuable as demand increases. Plus, there's this historical pattern with Bitcoin called halving.
Halving.
Yeah, basically every 4 years or so, the rewards for mining Bitcoin get cut in half. It slows down the creation of new Bitcoins, making the existing ones even more scarce.
Interesting. So less supply, more demand, higher prices. Makes sense.
And it's not just Bitcoin. Ethereum, the second largest cryptocurrency, is also expected to see big gains. We could see it trading above $6,000, maybe even $6,700.
So a lot of potential upside, but I'm sure there are risks too, right? What are the downsides?
Of course. Some analysts think there might be a market correction later this year, which could mean a dip in prices.
A dip? How much of a dip?
Hard to say. It's all speculation. There's also the competition from other blockchains. Ethereum, for example, is facing more and more rivals, which could impact its price. Some even say it could drop to $2,500.
That's a big range, from potentially huge gains to significant losses. What should our listener make of all this?
Honestly, it's still a very unpredictable market. These are just educated guesses. Nobody knows for sure what will happen. The important thing is to be cautious and not invest more than you can afford to lose.
So always gamble responsibly, as they say. But let's move beyond just the price of Bitcoin and Ethereum. Your sources emphasize that blockchain, the tech behind it all, has way more potential than just digital currencies.
Definitely. Blockchain's real power is that it's decentralized. No single entity controls it. It's also immutable, so you can't easily tamper with the records. And it's transparent. All transactions are recorded publicly. That opens up a lot of possibilities.
Okay, so what are some real-world examples? What can blockchain actually do?
Well, take supply chains. Companies like IBM and Walmart are already using blockchain to track products from where they're made to when you buy them. You can scan a product and see its entire journey, so you know it's authentic and ethically sourced.
That's pretty cool. I can see how that would build trust.
Exactly. And in healthcare, there are initiatives like MetaLedger, exploring how to use blockchain for medical records. It could give patients more control over their data and prevent counterfeit drugs.
So it's not just about making money, it's about making things more efficient and trustworthy.
Absolutely. And there are even more possibilities. Blockchain could be used for real estate transactions, making them more transparent. Estonia is already exploring blockchain voting systems, making elections more secure. You could have peer-to-peer energy trading on a blockchain, enabling a more decentralized energy grid. And even artists can use it to protect their intellectual property.
Blockchain voting, that sounds interesting. And peer-to-peer energy trading. Wow, that's a whole new level.
Right. And then there are smart contracts. These are agreements written in code and stored on the blockchain so they can be executed automatically. Think of a rental agreement that releases payment to the landlord when the tenant fulfills their obligations.
So if I understand this right, blockchain isn't just about making money. It's about building better systems in all sorts of areas.
Exactly. Even if the price of cryptocurrencies goes up and down, the underlying technology has the potential to really change the way we do things.
But of course, there are always challenges. Regulation seems to be a big one for crypto. Your sources mention a push for clearer rules, especially in the US, particularly around stablecoins.
Yes, regulation is crucial. Stablecoins, by the way, are cryptocurrencies designed to be less volatile. They're usually pegged to something stable like the US dollar.
So kind of like a bridge between the traditional financial system and the crypto world.
Exactly. And because they're designed to be stable, people might use them more for everyday transactions, which means regulators need to be more involved to protect consumers and ensure financial stability.
But globally, it seems like there's no single approach to crypto regulation, right?
It's a mixed bag, definitely. Some countries, like El Salvador, have embraced Bitcoin. Others, like China, have basically banned it. The EU is trying to create a more unified approach with its MiCA regulation, but it's still a work in progress.
And there are geopolitical concerns too, right? Some worry about countries using crypto to bypass sanctions.
Absolutely. This technology has the potential to shift global power dynamics, so it's a big deal for governments.
So how important is it to get regulation right? What are the risks of too much or too little regulation for our listener?
Well, clear regulations can build trust and encourage more people to use crypto. It can prevent scams and make the market more stable. But too much regulation could stifle innovation. It's a delicate balance.
It seems like central banks are also getting into the game with central bank digital currencies or CBDCs.
Yes, that's a major development. It's basically governments creating their own digital currencies.
What are the potential benefits of that?
Well, it could improve financial inclusion, giving more people access to digital payments. It could also make payment systems more efficient. And it could give central banks new tools to manage the economy.
But there are also concerns, right? Like privacy and the role of traditional banks.
Absolutely. If governments control the currency, they might have access to a lot of personal data. And CBDCs could compete with commercial banks, potentially disrupting the financial system. There are also cybersecurity risks to consider.
So how will CBDCs impact the existing crypto world?
It's hard to say for sure. Some think they could be competitors, pulling people away from Bitcoin and Ethereum. Others think they could coexist, maybe even work together. It all depends on how these CBDCs are designed and implemented.
Another challenge for crypto has been scalability and interoperability, basically making it faster and easier to use different blockchains together. Your sources mention some solutions being developed.
Yes, these are key areas for wider adoption. One approach is layer 2 solutions. These are like secondary networks built on top of existing blockchains, like the Lightning Network for Bitcoin or Arbitrum and Optimism for Ethereum. They process transactions faster and cheaper.
Okay, so it's like adding more lanes to the highway to speed things up.
Exactly. And then there's sharding, which is basically breaking up the blockchain into smaller chunks to improve efficiency.
What about making different blockchains work together?
That's where interoperability projects come in, like Polkadot and Cosmos. They're building frameworks that allow different blockchains to connect and exchange information and value.
So why are these technical advancements important for the average person?
They make cryptocurrencies more practical for everyday use. Faster transactions, lower fees, seamless interactions between different blockchains. All of that makes it easier for people to use crypto for things like shopping, sending money, or accessing financial services.
It seems like there are a lot of real people already using crypto in interesting ways. We talked about the Bitcoin pizza guy, but your sources also mentioned Christopher Cuff.
Right. He bought some Bitcoin in 2009 as part of a research project and forgot about it. Years later, he realized it was worth millions. Another great example of early adoption and just how much the value of crypto can change.
Talk about finding a winning lottery ticket. And then you have people like Changpeng Zhao, who built Binance into this huge crypto exchange.
Yeah, there are so many stories like that. And it's not just individuals. Companies like MicroStrategy are investing heavily in Bitcoin, and traditional banks are exploring DeFi.
DeFi. Can you explain that for our listeners?
DeFi stands for decentralized finance. It's basically using blockchain to create financial services that are more open and accessible than traditional systems. Think of lending, borrowing, trading, all done without banks or intermediaries.
So cutting out the middleman.
Exactly, and we're seeing real-world applications of this technology already. Companies like Ripple are making cross-border payments faster and cheaper. Platforms like Realty are making it possible to own fractions of real estate. Even UNICEF is using crypto for humanitarian aid.
So beyond all the speculation, there's real utility here.
Absolutely. We're seeing the beginnings of a new digital economy powered by blockchain and cryptocurrencies.
But let's not forget about the environmental impact. Bitcoin's energy consumption has been a major concern.
Yes, that's a valid concern. Bitcoin's proof-of-work system uses a lot of energy.
But it sounds like the industry is working on solutions.
Definitely. There's a big push towards more sustainable alternatives. Ethereum has already switched to proof of stake, which is much more energy efficient. New cryptocurrencies like Solana and Cardano are being designed with sustainability in mind. There's also growing use of renewable energy for mining and initiatives like the Crypto Climate Accord to reduce emissions.
So progress is being made.
Definitely. There's still work to be done, but the industry is taking the environmental impact seriously.
Finally, it seems like traditional finance is starting to embrace crypto. We're seeing big institutions getting involved.
Yes, that's a big sign of growing acceptance.
The approval of Bitcoin and Ethereum ETFs is a big deal, right?
Absolutely. It makes it much easier for regular investors to get exposure to these assets.
And we're seeing companies adding Bitcoin to their balance sheets, banks exploring blockchain, payment companies accepting crypto. It's like the lines are blurring between the old and the new.
Exactly. This institutional involvement brings more legitimacy, more stability, and more potential for growth.
So, what does all this mean for the future of crypto? Is it finally a legitimate asset class?
I'd say it's definitely moving in that direction. The involvement of institutions and the growing adoption of blockchain technology suggests that crypto is here to stay.
Okay, that was a whirlwind tour of the crypto landscape. So, what are the key takeaways for our listener? Should they invest in crypto?
Well, like we said, it's a complex and still evolving space. There's potential for big gains, but also significant risks. It's crucial to do your research, understand the technology, and invest responsibly.
Exactly. Remember that pizza story. It highlights the potential for massive growth, but also the volatility and uncertainty of this market.
Right, and don't just focus on the price of Bitcoin or Ethereum. Pay attention to the underlying technology, blockchain. It's being used to solve real-world problems and create new possibilities across many industries.
And keep an eye on regulation. Clear rules are essential for wider adoption and long-term stability.
And don't forget about CBDCs. Governments are getting involved, which could have a major impact on the future of crypto.
So as you consider investing in crypto, remember, it's not just about the potential for quick profits. It's about being part of a technological revolution that's changing the way we think about money, finance, and even the way we interact with the world.
That's a great way to put it.
So for our listener, what's the one thing you'd leave them thinking about? What's the big question they should be asking themselves?
I'd say think about the potential of blockchain beyond just cryptocurrency. How could this technology change your industry, your community, your life? That's the real story here.
Awesome. Thanks for joining us on this deep dive.
It's been a pleasure.
And to our listeners, keep exploring, stay curious, and as always, thanks for tuning in.